Stonks can only go up. That is until they go down. This so-called everything bubble, or the super bubble is what many are calling it. We're up against forces that are challenging the entire investing landscape. Welcome to another edition of Financial Fitness Friday, my weekly podcast where I share a few words of financial wisdom to help put you back in the driver's seat of your financial future. Today is Friday, May 13th. So happy Friday the 13th, everybody. Hopefully today will be a better day in the markets than that name might imply. Well, today we are going to talk about the stock market. And as we all know, Stonks can only go up. That is until they go down. This so-called everything bubble, or the super bubble is what many are calling it. We're up against forces that are challenging the entire investing landscape, with the Fed pivoting on their transitory inflation stance since last November. And we all knew that was a load of crap. But the shift commenced a monetary policy of a tightening cycle to combat these inflationary price pressures, but it's continued to weigh on equities, along with stronger dollar. That those two things combined are really hitting earnings right now. Now, many have also warned that other industries and sectors have far exceeded the fundamental value by a large margin, aka they're extremely overvalued. And right now, those things are coming down. It's correcting. And why? Well, they were propped up by the Federal Reserve and the once strong army of day traders that surfaced during the onset of the coronavirus pandemic. Now, as an aside, my social media used to be flooded with all of these young people coming across my TikTok For You page, Instagram, Facebook, with all of their hot stock and crypto tips that were going to make me rich. Well, over the last month, I don't see them anymore. They're completely gone because they're having their asses handed to them. Look, let me go to a quote here by Jeremy Grantham. He said this, and he said this back in January. Today, the U.S., we are in the fourth super bubble of the last 100 years. Even more dangerously for all of us, the equity bubble, which last year was already accompanied by extremely low interest rates and high bond prices. Now it's been joined by a bubble in the housing sector and an incipient bubble in commodities. So think about that. We've got the stock market or equities. We have extremely low interest rates that are now coming up. We had high bond prices, which are now coming down. We have the housing bubble and commodities. But what's new this time, and only comparable to Japan in the 1980s, is the extraordinary danger of adding several bubbles, all of those things together at the same time, as we see today, with 3.5 major asset classes bubbling simultaneously for the first time in history. So potentially some very dangerous waters we're going to be treading here, perhaps over the next several years. Look, now, since this all started, since the beginning of the year, there's been a major sell-off that has plagued the Dow Jones and the S&P 500, while the tech-heavy NASDAQ has been in a bear market since March. And check this out. Nearly half of the stocks that are included in that index are now down more than 50%. They have fallen more than 50% from their recent 52-week highs. Think about that. Almost half of those stocks have lost 50% of the value. And the crypto markets are even riskier. They've also taken a hit. Bitcoin, which was $66,000 or $68,000 in November, as of today, it was down to $28,000. So Bitcoin has lost more than half of its value. We're also looking at elevated commodity prices. They remain subject to supply chain issues as well as a volatile supply and demand. Meanwhile, purchases of ETFs in April fell to their lowest level since the depths of the COVID-19 crisis, as inflows from both institutional investors and the retail investors have dried up. Now, let's kind of wrap this up with this. No more diamond hands. Okay, I got a quote for you. Yields are climbing because investors think inflation is out of control. This was said or noted by Peter Anderson, founder of the investment firm Anderson Capital Management. Matthew Tuttle, CEO at Tuttle Capital Management, added, a lot of these guys, and I'm talking about these younger guys on TikTok and Instagram and Facebook, a lot of these guys started trading right around COVID. So their only investing experience was this whacked out, overfueled, overvalued, Fed fueled market. Okay. Now that all changed with the Fed pivot in November, but all of these young jabronis who've only been investing for 2 years and who only knew their only investing experience was in the middle of a bull market, they didn't realize that because they've never seen a market that wasn't supported by the Feds. And the results have been absolutely horrific. As I mentioned earlier, those people have been wiped out and none of their videos are coming across my social media pages anymore. So that's going to wrap it up. So if you're looking not for hype, if you're looking for financial planning that is based in fundamentals, both with retirement planning and investments, I'm also a huge fan of using maximum funded life insurance policies to create your own privatized banking system, combining all those different elements in a way that works well for you. Look, if you're sick of the hype, if you're sick of speculating, if you're sick of these heavy losses, listen, all you got to do is reach out to me. I'm happy to help. I'm happy to schedule a complimentary consultation to learn about you and your goals, where you're at right now, where you're trying to get to go to in the future. What are some of the things that's concerning you right now, and put together a solid plan built upon fundamentals that we can stick to a plan over a long-term period, through the ups and through the downs, so you can sleep well at night and so you can have peace of mind. Okay. So all you have to do is just send me a message or respond to an email, or you can reach out to me, ronald.sneller@snellerfinancial.com. Well, that's going to wrap it up for today on today's Financial Fitness Friday. Thanks for tuning in, and we'll talk to you later. Everybody, have a great weekend.